Hello and welcome back to another episode of Money with Min. And today we're going to talk about the stock market crash. We are starting to see the signs of an incoming stock market correction. But before you make any rash decisions, hear me out. According to Warren Buffett, the old saying says, be fearful when others are greedy and greedy when others are fearful. Right now you might feel scared because it's all doom and gloom and you think you're about to lose a lot of money. But what you have to realize that investing is a long-term game. And when you zoom out to over the decades, you'll see those long-term gains. So in this video, we're going to talk about what's happening, why it's happening, and what you should do about it. So first, let's talk about what's happening. Over the last year, the stock market has seen tremendous growth and is due for what is called a market correction. And a market correction happens when you see an adjustment of over 10% of the market's previous high. And when you put that into perspective, imagine losing 10% of your wealth. That's a pretty big deal. And with millions and millions of new retail investors in the last year or two, we've seen patterns of investing that we've never seen before. Alongside those new investors, we had some of the lowest interest rates we've ever seen. And on top of that, we had billions and billions of stimulus dollars poured back into the stock market. All of that combined caused stocks to soar way above valuations and earnings. The stock market has been overextended and overbought since COVID started. And with every extended market, there needs to be a correction. And that point could be very soon. Now let's talk about a couple reasons why this is happening. One of the first big reasons is that interest rates have historically been at an all-time low, but have recently started climbing back up. And when interest rates are low, it's a catalyst for economic growth. Consumers are able to spend more, businesses are able to spend more on growth and operations, which overall leads to a very bullish stock market. But now with interest rates climbing back up, people are looking for less risky returns. I expect some older folks are starting to sell off their stocks because of the volatility that's about to happen. They're looking for safer routes for their money as they enter the retirement age. And you'll see this by a shift of selling from stocks to bonds because bonds have much lower risk. And when stocks start getting sold off in large amounts, this causes downward pressure on the entire market. Here's another depiction of how increased interest rates impacts the entire economy. Let's start with the Federal Reserve. When the Federal Reserve increases the interest rate, it's more expensive for the banks to borrow money, which in turn, the banks pass on those expenses to the consumers. So money is more expensive to borrow in terms of credit card debt and mortgage. This in turn leads to consumers having less disposable income. And when that happens, they spend less money, which takes away the revenue and profits from the business, which then the overall effects leads to the stock market going down. So ultimately, it's not a matter of if, but rather a matter of when. So let's prepare for the inevitable of when the market corrects. So finally, let's talk about what I plan to do and some things that you should know. Firstly, I plan to monitor the market a little more closely over the next few days and weeks and continue to manage my risk appropriately. And like every other wise investor, I'll tell you the same. While you can't time the market, you can study what's happening in the trends to make better decisions. And as someone whose normal investing strategy is just basic dollar cost averaging, I normally don't sit out of the market too long, but I know a dip is coming. So with that said, my actual strategy is to invest more during this correction than I normally would. Currently, I'm putting smaller amounts into the market while I wait for a huge sale to happen. And I'm currently doing analysis to find stocks that are undervalued that have potential growth over the long term. One prime example is looking at stocks within the travel sector, because as the country returns to normal, those businesses will start to grow and thrive again. And the absolute worst thing you can do right now is to sell off your stocks for a loss. Remember that investing is a long game, and you should consider this an opportunity to buy those stocks and those companies that you value at a major deep discount. So in summary, these are the 3 takeaways from this video. Number 1, the market's going through a correction right now, which is healthy and normal. Every overextended market gets corrected at some point. Number 2, no one can predict how long this will last for or how far it will drop. The stock market can remain irrational longer than you can remain solvent. So be flexible and be cautious as you monitor how the market conditions evolve. And number 3, remember to not look at the short term of the stock market. It's always going to be scary, but rather look at the long term. This is the right time to focus on picking up stocks at a discount and to focus on long-term gains. Remember to be greedy when others are fearful. Let me know in the comments below what your plan with the stock market is right now. If you enjoyed this video, please give this video a like. It really helps me out. And if you want to see weekly content on how to get wiser with your money, definitely consider subscribing and hit that notification bell to get notified when my videos go live. And as always, thanks for watching. I'll see you next time.